Hello and welcome to Pro Trader Strategies Market Commentary for Monday, December the 3rd. My name is Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal for my commentary on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, I'm here to teach you some different strategies you could then implement into your portfolios, but please do that in your own way. Also, remember the past performance of any trading system or methodology is not necessarily indicative of future results. All right, having that out of the way, let's get it on with some economic data first before we get into the markets. One thing to note is at the G20, Trump and China came up with an agreement to hold off on some of these tariffs. They're putting a pause, if you will, to see if they can work out while they're working out the details in and around those. So that being said, caused the stock market to really spike higher this morning with those tariffs being lifted. We'll talk a little bit more about that in the when we talk about the charts. But let's talk about some other economic data that we got across the pond. We did get some manufacturing PMI numbers out of Europe, but remember they look at the flash estimates. But we got the final manufacturing PMI coming in at 51.8, expected to be 51.5, so right in line with expectations there. But Great Britain doesn't necessarily look at the flash estimates. They come up with their own manufacturing PMI, and it came in at 51.8, expected to be 53.1, expected to be 52.8, so higher than expected there is good for the overall market. And then, sorry for laughing here, but I think every Fed governor is speaking today. We've got Quarles, Williams, I mean, just about everybody. I think Bernard speaking. So quite a few Fed governors speaking today, which could get the markets moving a little bit. I think it's more a factor in and around the jubilation of this trade tariff thing, this trade war kind of getting put on the back burners or paused anyway. All right, here in the United States, we got our ISM manufacturing, which is Institute for Supply Management. That's our main number. We don't look at the flash necessarily, but the ISM manufacturing PMI came in higher than expected at 58.3, expected to be 57.3. That's good. We got construction spending came in, though, a little bit lower than expected at negative 0.1%, expected to be a positive 0.4. ISM prices paid came in much lower than expected at 60.7, expected to be 70.3. Now, some people are probably going to say that's not a good thing, but most of that is in line with these oil prices that we're really seeing come off. I think that's the major catalyst for seeing that number coming in a little bit lower. And then throughout the day, we're going to be getting total vehicle sales. So check out Phil LeBeau. He's actually really good on Twitter about reporting all of that stuff. That's who I usually get that information from. All right. Now, crude oil is moving a little bit higher today, more or less, I think is a product of this big sell-off. The rest of the market was celebrating today. So, you know, a rising tide lifts all ships, and it had an effect on crude oil inventories futures up about $1.70 right now in that 50 handle. Thought we might go down and test that 40 handle this week. So we'll still see if that happens throughout this week. We are going to get some more inventory numbers later on as well too. Gold moving higher today, a product of this China trade war getting put on the back burners or put in pause. So a nice big spike here in gold futures as the rest of the broader market is rallying as well, except for Bitcoin, which is a little disconcerting because we would expect Bitcoin to have a little bit of a spike here. Not really seeing that. Bitcoin could be a thing of the past coming very quickly. Bonds moving higher slightly. I don't think that's necessarily a product of all of these Fed governors speaking, but the broader market's moving a little bit higher, and we're starting to see some weakness in the equities as this day goes on. I think a lot of it has to do with people that poise themselves for a bounce here are lightening up some of their long deltas on this move. So that's causing the overall market to come down a little bit, and the VIX to push back up. We were in the 16 handle on the move this morning. But as I said, equities are coming down. That's going to cause the VIX to start pushing higher. So not really seeing the volatility come out. This is what I'm talking about with the Dow Jones. I think it was up about 400 points, or at least expected to be opening up about 400 points higher. Ever since that open, we spiked on the open and then have since done nothing but slide. We can see it a little bit better probably in the NASDAQ. Came up, touched the 200-day and the 50-day, which is actually looking like they're getting ready to cross. Now that golden cross is a very bearish sign, generally speaking. We've gotten a little pop to the upside above the 38 Fibonacci, but I don't know that that's going to hold a whole lot of support resistance there because it lines up so closely with the point of control, which is going to really be a magnet for this market to come back down, especially when you create these gaps. The markets really like to cover those, so we could easily see that get covered. But you can see the overall market's just not really celebrating throughout the day session as the overnight session really spiked on that news of China and Trump coming up with an agreement. As you can see here with the E-mini S&Ps, they're still up on the day, but on the lows of the day. And we don't have that golden cross happening with the 50 and the 200-day moving averages crossing yet, but it is very close. Much close. I mean, they're actually kissing over there in the NASDAQ. So we could expect to see that happen here as well. This is what I was talking about with the E-mini S&Ps. Obviously, before the market opened, we got that news of this trade war getting put on hold right now. So the overall markets opened up, spiking higher. And then as you can see, as the day session opened up, there's been nothing but bearishness coming into the market. And we are right now on the lows of the day. Having said that, I've covered a lot of trades right off the bat early this morning. As I talked about some of these trades, I was trying to squeeze out for a little bit better than 50% of my max profit, which was achieved. So took that opportunity to get out today. And an IBM I had on the D's was short the 115 puts in there that I collected $1.07 for, and I bought those back this morning for 30 cents. So probably not as good of a trade price right now with the market coming off. Volatility is continuing to come out in IBM, so you may be able to get out pretty close to that, but I am out at 30 cents. And then FedEx is another one that I covered this trade. Took an opportunity today with volatility when it was coming out and got the directional move to get out a lot of these. So took out a lot of my long deltas and added actually a few short deltas because my overall portfolio was very long as I've been scaling into these trades as the market was coming off. So in FedEx, I went into the December and I was short the 200 puts in there that I originally sold for $1.28. Was able to buy those back for 49 cents this morning. Obviously, good trade location. I didn't expect the market to really sell off this much. I actually was expecting it to move a little bit higher, but I didn't want to miss the opportunity to get out of a lot of these trades that I've been working for several days. I wanted to stay mechanical with it. Yes, I did squeeze out a little bit more than my profit targets, but that was because I was getting that directional move and wanted to play it out a little bit more because I got tested a little bit early on these. So with Amazon, I went in and I was short the December 1,355 puts in there that I originally sold for $3.85. Was able to buy those back for around 60 cents this morning. And that was in Amazon. Let's pull up the Amazon trade here. So obviously with that spike higher, able to get out for much better than 50% of my max profit. And since I put those trades on, you can see volatility coming out as well. So I got a directional move in my favor and volatility coming out. That's how you increase your probabilities of success with those kind of trades. And then a couple of trades that I put on with Deere, we got a huge spike to the upside today, so I couldn't pass up the opportunity to use this as a catalyst to start selling some short deltas. Not that I'm really bearish on Deere, but with that big spike, it immediately feels like it's overextended to the upside. So I sold the December 180 calls in there, so you can see the 180 calls is a over a $5 higher move on the 52-week high. So that is a major move, and I don't think that that's going to happen at least in the next 40 days. So I was able to sell those 180 calls for $1, and it's actually a little bit better with the market coming off now as well. Philip Morris is another one that I added some short deltas with. It came up, tested the Fibonacci right there, and as price has been accepted at these lower levels recently, I think it's going to roll back over as well. So with Philip Morris, I was able to go in there and sell the January 90 calls in there for 82 cents. Now those deer were the January. I don't know if I said December, but the deer was a January 180 calls. Same with the Philip Morris. So that's about it. Other than check out Thursday's webinar. We're going to be doing a good one. It's going to be on the long put diagonal. I'm going to show you how to isolate volatility so that you don't have to worry about it going forward. It's great for a bearish market assumption. So now that we've had this move, it might be a really good opportunity to add some of these to our portfolios. So check that out at protraderstrategies.com. Also, give me a thumbs up, thumbs down, like or dislike on the video. If you give me a dislike, let me know what it is you disliked about it, okay? So, can't take that. Take it easy.